What's going on, everyone? I'm Encore. This is Tomorrow Never Comes. And today I wanted to walk you guys through having a plan. All right? And this is so key, right? This is a very famous saying, a very common saying, which is if you fail to plan, then you plan to fail. And what does that mean exactly? So a lot of us, including myself, like to jump into things, right? Let's see if this is going to work, this is going to work. And what ends up happening is some of it works, some of it doesn't. We don't really know where that kind of falls. And so we might over-exaggerate some of the wins and kind of rationalize or undervalue the losses. And we don't really know where it adds up and kind of see if we're going on the right path. And then if we want to change something, because there's so many variables, you don't even know where to start. Okay, so the key is you have to have a plan. That doesn't mean that your plan cannot change. Of course it can, right? You can adjust your numbers, you can do what you're not, but if you or do whatever you like and tinker with it. But if you don't have that initial plan, you have no idea what to do and what to change, or even if you should change anything at all. So I want to get into this, and this comes into the crypto space. I mean, you can apply this to the stock market or anything like that, but mainly here, I'm going to talk about the crypto landscape and really kind of some examples of some things to take into consideration and things that you can tinker with. But I want to give you guys a base. I want to give you a base so that you understand that there is something kind of like a blueprint, maybe like a foundation, something to build off of. That's what I want to get into today. All right. So first things first is we got to kind of talk about certain things that are talked about. You may hear this, in the news, the headlines, whatever articles you may read, something called risk on and risk off. And this is really all comes down to the vision of the person who's managing the portfolio. So in your case, it's going to be you, right? This is what you perceive to be the case at that time and moving forward. And that timeline may be very short, may be long, but you have a vision in place of where you think you are, and based on that vision, you're going to deploy your capital, okay, your money, however you see fit based on where you see the market. All right. So, and then on top of that, we're going to go through some of I kind of narrowed it down to 4 major players. These are buckets that I kind of put things in. They can change, but this is relatively how I go about things. Is you've got your blue chips. So in the crypto space, that's going to be mainly Ethereum or Ether and Bitcoin, and then altcoins 100. So that's anything in the top 100 when it comes to market cap. And you can always check market cap by CoinGecko, Live Coin Watch. There's a bunch of different platforms that will show you what the market cap is. And usually anything 100 up is relatively safe. I mean, the higher up you go, Bitcoin and Ether are right there at the top. So they're time tested and true, so they're going to be safe. And then as you start to go lower and lower and lower, things become a little bit more, the top 100, I won't say risky per se, but definitely not as concrete as the top 1 and 2 positions. So that's my A100s, altcoins 100s, and then my A101 plus is anything outside of those 100 coins, right? And that's definitely where the risk becomes even more apparent. And as the market fluctuates, those guys can go either up or down pretty rapidly and significantly. So let's kind of get right into this. What exactly do they mean by risk on? All right. So this is usually when the market is doing well. So I said it's a bull market. Okay, it's a bull scenario. Your vision of what's happening in the space and moving for whatever timeline forward is the market's going up. Right. It's a good time to be invested in the market. So you don't want to have too much sitting on the sidelines because gains are being lost at that time. All right. And so how I narrowed it down here is we have BC for blue chips, SC for stable coins, A100 is for the altcoins in the 100s, and A101 is, again, anything outside the top 100 market cap. Now, stable coins, something I didn't touch on in the previous slide, these are pegged to the US dollar. So they don't fluctuate like anything else, right? You don't have the massive losses, which is nice, but you also don't have the massive gains. So you can literally think of them as cash sitting on the sideline. You've got some dry powder ready to deploy, if needed. So that's that category. It's kind of like your reserve, and you're going to use that reserve to buy more assets or to hold that and more into reserve as things kind of settle out. So risk on here is you're mostly invested. It's a hot market, it's a bull market, things are kind of exploding or doing well at any rate, and you want to be in those assets. You don't want to be on the sideline. All right. So again, these are examples. This is obviously not financial advice for any of you, and you can play with the percentage as you like. I just want to show you guys that there needs to be something written down, not in your head because you won't remember and that may change. Something written down where you can say I have this percentage in here and in here, and then as the market changes, you can adjust accordingly. All right. So this particular example, remember, it's a hot market. So we've got about a third here, 33%, 33% over here in our blue chips. We have, you can see stable coins at 2%. So a very small amount. As I said, stable coins are dry powder. It's like cash sitting on the sideline. So you want to keep, now some people say keep 10% or more, 10 to 20%. But again, this is an example. You need to find your sweet spot of how much cash do you want to sit on the sidelines? How much cash do you want to have, in this case, stable coins, USDC or USDT, right? So how much of that do you want to have sitting in your portfolio at any given time? And so in this case, we're going to have 2% because we are mostly invested in the actual market itself, right? And then our A100s, we're sitting here at around 40%. So you can see that the majority here is in that top 100. So outside of the 1 and 2, which is Bitcoin and Ethereum, we're going here into the basically 3 to 90 to 3 to 100, right? That's where we're going. And so why so much in there? Because those aren't as stable as Bitcoin and ETH, but they're tried, tested, and true to some degree. And in that uncertainty or volatility is where you have most of your gains, right? Or they're on the safer end, but still you're having some gains out of them. So you want to keep the bulk of your portfolio there. And then the A101 plus, so these guys are like, they can skyrocket. You can get like thousands of percentage of gains on these, but at the same time, when things kind of flip, you can get thousands of percentage of losses too. And a lot of these can actually go to zero and they don't survive. So you always have to be careful. But in a bull market, when things are hot, everything is kind of pumping. And usually these ones in the outside of the 100, they're usually the ones that are pumping last. So just note on that as well. Usually when those are going out of control, the market's starting to get a little bit hot, a little bit too hot, and may round out soon. All right. So bulk of the portfolio is in that 3 to 100 range in the market cap wise. Blue chips have a third. About a quarter of your portfolio could be in 101 plus, and then you have a very small amount in stable coins. So that's the risk on. The general 30,000 feet kind of perception of this or viewpoint of this should be less dry powder on the sidelines, more into the kind of safe but risky zone, and then divvy everything up outside of that. So that's if it's a bull market. What if you're unsure, right? A lot of times you may be in a market. First of all, if things aren't going out of control, you may not even know, am I in a bull market? Am I in a bear market? Right? So there are those time periods, and it could be even within a market trend. So let's say things are trending upwards. There are pockets where you may be unsure. And so you can adjust accordingly if need be, right? So you're not sure what's happening in the market. So what do we do? So we want to keep, in this particular example, we're going to keep a bulk of ours in blue chips. So Bitcoin and ETH. That's where we're going to keep a bulk of ours. Why? Because we don't know where they're going to go, right? And those two usually hold their values very well. As things goes up, they have gains as well, maybe not as much as the more riskier ones, but as things go down, their downside is very limited, or more limited than the rest of them. So it's a good place to park, your assets is in the blue chip category. And then stable coins, you can see in the neutral, because we're not sure, we actually have more of our dry powder sitting around, more of our reserve, right, that we can deploy. As soon as we know which way the market's going, if it flips to hot, we can kind of deploy our capital that's kind of sitting around, wait, and we can kind of reap the benefits for those gains, right? And if it flips the other way, where it gets bearish or trending downwards, we can either stand pat or sell off more into our stable coins. And so about 15% in our top 100s, and then very small percentage in anything outside the 100 market cap. Again, risk, we're unsure, risk could be high, want to limit our downside. So now if we are in a risk off mode, right? So our vision, what we see the market, that's telling us that, hey, we need to pump our brakes. Things are not trending the right way. So we just kind of want to sit more on the sidelines and, not be in the market so much. You guys can see from this pie chart, our stable coin here is 80%. It's very high. All right, and then 15% is going into our blue chips because, like I said, the downside is limited on our Bitcoin and ETH, and then very small percentages when it comes to our top 100 and 100 plus or 101 plus coins as well. These aren't written in stone. You don't need to follow exactly to the T. It's really more about the broad concepts within each market. So here we have so much of our portfolio sitting on the sidelines. And again, this is more if you're trying to get in and out of certain assets. And we're going to touch on that on my last slide here. But so it's really more about, are you active in the market? Okay, that's the mentality here, is you are going in and you're going to switch things around depending on what you see. All right, so we're sitting here mostly on the sideline on risk off. Risk off, I mean, we don't want anything, right? Turn the risk. We don't want anything to do with it right now. We're going to turn everything off. And so that's why a lot of our assets or our capital is parked in stable coins. All right. And then lastly here, this is where we talk about the whole thing. So what I kind of touched on, risk on, risk off, all of that really kind of plays out to, are you actively in the market, right? And if your portfolio is not all active, then there's kind of an overarching mindset when it comes to your total portfolio. So you kind of have subsets within, right? And so what can you have? You can have majority as hodl. So you're just, meaning you're holding on for dear life. You're not going to get in and out of things, right? So you could have it where it's 100% and you don't touch it. And if that is the case, you close your eyes, you plug your ears, you don't listen to anything, and at some point down the road, you check your portfolio. So you can have that. You can have it where a majority of it is like that, and a portion of it is just for fun. And that fun could be you're trading, you're doing NFT things, you're doing some yield farming or anything like that. It's kind of like your ability to play with certain things. And then also remember, you want to have a portion of your portfolio in stablecoins. So it doesn't really matter what type you have. You want to make sure you have some stablecoins ready, just in case the market flips a certain way. So we touched on, you can have a majority for hodling, but you can also have a majority for fun. And this is for someone who's just in it for the gains. That's all you want. So you're trying to find those pockets. Even within downtrending markets, there are pockets where gains can be made, right? And you just kind of have to find them. So are you creating a portfolio that's tailor-made more towards speculation or just getting gains, and you have a smaller portion of hodling, right? Or you could be a completely speculator. So all I'm saying is that you have to come up with percentages for this, right? We talked about percentages within stablecoin, blue chips, our A100s or A101 plus. But there's also percentages for how much you want to be invested as a whole. Do you want to sit on the sidelines and come in as a speculator? Do you want to, you don't care where the market goes, you're always going to keep your blue chips intact? All these things have to kind of be played out. And here's the thing. So I want you guys to listen to this and think, man, it's a lot of work. I got to come up with all these percentages. One, I don't like math. And now I got to figure out, what percentages of am I going to hold? What percentage am I going to play? Like, all that can be daunting sometimes. I will say you should have somewhat of an idea, if not fully written out, before you jump in. But what I don't want to see is that you just don't jump into the market because you're waiting for the perfect percentages to line up. Don't do that, right? If it's becoming such a big hurdle that's preventing you from jumping in the market at all, I would say position yourself in a very small amount. $5, $10, $100, whatever it is. Small amount, just so you start to learn, and then you start to build this out properly. But on the flip side, don't go all in and not have some kind of plan in place. So it's very important to have this, because from firsthand experience, when markets go up or down, your emotions get way too involved. And if you don't have something to if you don't have something to lean on, if you don't have something to refer to, that's your reference point, your anchor point, you're kind of gonna get lost. And so I can't stress this enough. Have somewhat of a percentages, and you can alter that as you go and kind of get more familiar with it. So I hope this brought you guys some value today. If so, like the video, subscribe, hit the notification bell, share, do all those great things. And just remember, guys, tomorrow never comes. Get in the game today. Have a good one.